Hello and welcome to another update video about ADA. Pretty painful sideways action at the moment across the market. TradingView here shows a little bit of green in the crypto market today, but really just a continuation of what we've seen since end of last week, where we were waiting for this fourth wave across the market. And also here with ADA, I mean, the movement to the upside at the moment that occurs here is just a lot of overlapping price action. That typically indicates it is a corrective move. We have seen already a bit of a reaction yesterday in this fourth wave to the downside, but so far, as you can see, we are holding the golden ratio, the 36 cent level. My general view hasn't changed here about ADA. Still waiting here for a wave 2 to complete. Ideally, one more low. A lot of coins are due another low in my opinion and could then rally in a third wave, but it's a bit of a wait and see. A lot of them could have bottomed already. Support is quite strong. Here it's the golden ratio on the ADA chart. If they bottomed already, including ADA, if ADA bottomed already, then the move down is probably a WXY, or this B wave top just shifts here one to the right and we count the move as a triangle pattern. But overall, we are in the support area. We are now in the trend reversal area for this particular scenario, in which we count the move between March and April as a leading diagonal wave 1, and the move down that started in April as a wave 2 correction in an ABC structure. So afterwards, as long as we're holding relevant support, and that would be in this particular scenario, the 33.3 cent level, we could expect a third wave rally. But of course, the condition is that the 33 cent level needs to hold, or to be exact, 33.3, because in 9 out of 10 cases, if price breaks and sustains below the 78.6 retracement, this particular setup is going to be very weak, most likely not going to work out. It can still work out, but whenever it does, it may then fail at a later point because the chart or the setup will remain weak. However, there is an alternative wave structure, as you can see here on the chart, with a high B wave. So in case we go below 33.3 cents, there is one more bullish pattern we can explore, but it would be sort of the last bullish option on this chart before we look for new bear market lows. And if that 33.3 cent level breaks, I'm not talking about a wick or anything, but if we see a sustained break below that, which means we break below the level and consolidate there, or we break it, reclaim it, and break below it again. Those are things where I think, okay, this pattern or this structure, this particular setup is not going to work out. So we have that alternative count here, where we allow for a deeper wave 2 in a scenario where we have an overshooting B wave here in April, and we are now coming down in a C wave. In that case, the C wave would be an ending diagonal. I don't think it's very likely, given how flat it actually is. But it's not impossible. Also, here we would then have to say that as long as we hold 27.6 cents, the bullish scenario is still valid. But below 27.6 at the latest, I will primarily focus on new bear market lows. Not that I expect it at this stage, but these are pretty much the invalidation levels, the risk levels. But at the moment, the white count, in my opinion, is in control. We have that leading diagonal with an ABC structure to the downside. I think you can see how negative momentum is reducing. If you see how fast that sell-off was, and now we're sort of just nearly moving in a range. So negative momentum is clearly reducing. So maybe with one more low, we may get the divergences, the positive or bullish divergences we need to spark a third wave rally. At the moment, as long as price stays below the wave 2 high, which is at 38.3 cents, it is still possible and pretty much likely to get another low. Ideally, we want to avoid an overlap with wave 1. That is basically at 38 cents. So any break above 38 would already shift probabilities towards, in my opinion, a low might be in, but not clearly. And if we then see a break above the wave 2 high, I think we have to assume the low is already in. Bear in mind, we are already in the trend reversal area. So if we get one more low or not, it's very hard to forecast. I think we do. I think it's not ready yet for the upside, but it could be because we came down, we hit the trend reversal area, we've done what we need to do in this particular correction from a, let's say, corrective standpoint, how far the corrections came back, how far the Fibonacci levels, or how far the price came into the Fibonacci retracement zone. So it has done what it needs to do, and at any point it would be ready to rally. There is not much more to add at this stage. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.